The only difference between you and someone who is relaxing with their retirement money at 25 is simple. They had a plan. That's it. They are not magicians. They don't have any secret agents to help them. They just had a great investment plan they stuck to. So if you want to be that person to earn enough to retire early while everyone else is still figuring it out, I have the plan for you. This is Investing 101. In this video, I am going to break down exactly how you can start investing as a beginner in 2025 and still build enough wealth to retire early. Yes, even in this economy, by the end of this, you will know what to invest in, how to do it, and why it works. Sound good? Alright, before we get started, you should know what really matters when you are starting to invest in 2025. First, you need to understand risk, which means how much you are willing to lose versus how much you want to gain. Some investments are steady but slow, while others are riskier but can grow your money faster. I will give you options for both. We will also compare your options on the basis of returns, which means how much your money can realistically grow over time. We are not here for get-rich-quick schemes. We want solid, reliable growth. We will also look at how easily it is to get started because as a beginner, you don't want anything too complicated. Plus, I will make it clear to you what options are flexible so that you can start even with small amounts and adjust as you go. Along with all these parameters, we will take into account taxes. They can eat into your profits. So I will highlight ways to keep more of what you earn. And don't worry, we will talk about time because no one wants to spend hours managing their investments. This plan will fit into your life, not to take over it. So, with all that in mind, let's start with the first incredible options for investment in 2025, which is cryptocurrency. Now, I know what you're thinking. I missed the big Bitcoin opportunity when it was just $100 in 2013 or even $1,000 in 2017. True, Bitcoin is no longer in the triple digits, but the thing is you haven't missed out completely. While you may not turn $100 into millions overnight, the crypto market still holds massive potential. The golden opportunity is not gone. You just need to make this your golden chance. Cryptocurrency, particularly Bitcoin and Ethereum, remains one of the best investment options because of its long-term growth potential. Bitcoin is often called digital gold because it has consistently proved its value as a store of wealth. Meanwhile, Ethereum is the backbone of decentralized applications and smart contracts, which offers exciting use cases that continue to grow. These are the blue chip cryptos and they are great starting points for beginners. The only risk here is that the crypto market can be volatile, but with risk comes high reward. You just have to manage your expectations and think long term. Start small and consistent, investing only what you are willing to lose while watching the market trends. Platforms like Coinbase or Binance make it easy to get started. What about taxes? Yes, crypto is not the most tax-friendly investment, but what you can do is track transactions carefully and set aside a percentage for tax obligations. Don't let that scare you off. Crypto can still be a flexible, high-return option that fits into your life and future plans. If you miss the first wave, consider this your second chance. Another incredible option for you is investing in individual stocks. This is one of the most popular and exciting ways to start investing. You see, when you buy a stock, you are purchasing a small piece of a company, making you a shareholder. This means you get to benefit if the company grows, and depending on the stock, you might even earn dividends, which are regularly payments made to shareholders out of the company's profits. Historically, stocks have offered some of the highest returns among all investment options. For example, the average annual return of the S&P 500, a benchmark index of 500 large companies in the US, has been around 10% over the past century. However, picking individual stocks is not as straightforward as it sounds. It requires research because you have to analyze a company's financial health, leadership, competitive position, and future potential. So there is a bit of higher learning curve here. Now, how can you pick the best stocks to buy? If you are a beginner, I suggest blue chip stocks like Apple, Microsoft, and Coca-Cola, which are great places to start. Do you know why? Because these are established companies with a proven track record of stability and growth. Other than this, growth stocks such as those in the tech sector may offer higher returns but come with higher risks. Platforms like Robinhood or Trading 212 allow you to start with as little as a few dollars by offering fractional shares. Tax advantages such as Roth IRAs in the US or stocks and shares ISAs in the UK can share your profits from taxes. You must be thinking about the risk of investing in stocks right now. Well, we can mitigate that. All you have to do is to take advantage of diversification by investing in multiple companies or sectors. This can help reduce that risk. With patience and strategy, individual stocks can be a rewarding way to build wealth over time. The next great option that you can go for is investing in real estate investment trusts. It's a smart way to invest in real estate without actually having to buy a property yourself. Think of it like this: you put your money with other investors to own piece of income generating properties like malls, apartments, or office buildings. The best part is that you don't have to deal with tenants, repairs, or any of typical property headaches. You just invest and watch your income rolling. REITs are great because they pay out at least 90% of their profits as dividends, which means you get regular passive income. That is money in your account without having to sell anything. And because they invest in multiple properties, your risk is spread out. There is no need to worry about one bad property running your returns. Plus, they are super easy to get into. You can start small and buy shares through apps like Trading 212 or Robinhood, just like you would with stocks. Tax-wise, they are pretty efficient too. In the UK, you can hold REITs in a stocks and shares ISA, so your profits and dividends stay tax-free. In the US, holding them in an IRA can give you similar benefits. Now let's talk about risk. REITs are generally more stable than stocks, but they are not risk-free. If the real estate market takes a hit or properties are not rented out, returns can dip. Still, compared to owning physical real estate, REITs are flexible, simple, and beginner-friendly. So if you want steady growth and passive income, this is an option you cannot ignore. Moving on, we all know gold has always been the go-to for people looking to keep their money safe. And in 2025, it is still holding strong as one of the best investments for stability. Last year, gold prices hit new records, with spot prices climbing over $2,790 per ounce by October 2024, which was up more than 26% in just 1 year. That is a big deal, and it shows how reliable gold can be when the economy feels shaky. Now, if you're wondering how to start, there are two main ways to invest in gold. First, you can buy physical gold, like small bars or coins. It's something you can hold onto, and it is recognized and valued globally. Just keep it in mind that you will need a safe place to store it. Second, there's an easier option: gold ETFs or exchange traded funds. This lets you invest in gold without actually owning it. You can trade them on apps just like stocks, so there's no need to worry about storage or security. The question is, why is gold a smart move? For one, central banks worldwide are buying it up to diversify away from the US dollar, and this demand keeps price strong. Plus, gold tends to shine brightest during economic uncertainty or inflation, which makes it a solid hedge for your portfolio. Sure, it's not going to make you rich overnight, and it does not pay dividends, but gold is about security and long-term value. It is the set it and forget it type of investment, perfect if you are looking for peace of mind in unpredictable times. Now, if you still want dividends but don't want to spend time picking stocks or dealing with unpredictability of crypto, but still want solid growth, index funds are the way to go. They are simple, low risk, and perfect for beginners. Unlike gold, which comes with stability. Index funds are designed for growth. You are not just investing in one company, you are buying into the entire market. For example, the S&P 500 includes 500 of the largest companies like Apple, Amazon, and Microsoft, giving you instant diversification. Index funds have consistently delivered 8 to 10% annual returns over the long term. And the best part is that they are completely hands-off. If you just set up a monthly contribution and leave it, compounding does the hard work for you. Plus, holding them in tax advantage accounts like REITs, IRAs, or stocks and shares ISAs ensures you keep more of your earnings. I bet you are already considering these options, as there are just too many pigs to ignore. So with everything we have talked about of all the incredible investing options you have in 2025, what are you going to try first? Let me know in the comments. And before you go, don't forget to subscribe if you are ready to take control of your finances and start building serious wealth. Thanks for watching. You're welcome.